whole life insurance and the IBC is a perfect way to position yourself during times like this. Can you elaborate on that? And for those that want more information, please send an email out to ninja@vipfinancialeducation.com. Put Ninja in the subject line and be sure to include your first, your last name, and the best phone number to reach you in the body of the email, and someone from MCR's team will get back ASAP. Guys, we've had a lot of folks through the channel that have moved forward with MC and his team specifically for the whole life insurance policies and the IBC. So stay tuned if you guys are looking for ways to direct your own money, be your own bank, avoid the banks, avoid Wall Street. Definitely reach out to him. But to that point, MC, how does that help investors, whether they're seasoned pros or just getting into the investment game? How does that product help them navigate and really shore up some of those loose ends that they may have if they're just trying to go it alone or do the Wall Street thing or just put their money in a low yield savings or checking account?
Yeah, so where we are in the market cycle right now, my worldview and how I see it, now's the time for capital preservation and risk management. There's still some opportunities, short-term plays where you can move capital in and out, but the focus has shifted, right? So where we played a lot of offense aggressively and a little bit of defense, we're now playing way more defense than offense. There's still some offense, but it's defense. And in the end, just as in sports, because investing is a game too, a fun game, you have your offense that's going to win you games, but your defense is going to win you championships. And that's where infinite banking comes in. That's where life insurance comes in. If you think about capital preservation, which should be the priority, is protecting capital more than chasing massive gains. This is a fantastic vehicle because where would you keep capital at this stage? There's a lot of uncertainty. There's a lot of stuff happening out in the world. I mean, we've just seen in 2023, we saw 7 banks go under, 10 placed on downgraded by ratings agencies. And usually when they do that, it's almost like the beginning of a crisis, right? 11 has been placed on watch lists. We're seeing massive layoffs in the banking sector. We're seeing the closure of branches of major banks all across the country. You pick your big banks, there's closures and there's layoffs. So when you're looking at to protect capital, you have to look at it holistically. So do I just keep my money in the bank? Well, the FDIC just told me that they can only cover 2% of the deposits. So they don't even have the money to cover all the deposits, which they currently insure. So, would you keep it in a bank? And obviously, as you can tell from me, I'm not a big fan of that. That wouldn't make me sleep sound at night. You still do need a bank account because you're running a business, so keep very limited in there, large amount of capital. Personally, I would think that is very, very risky at this time. The other thing is, your other options are bonds, which is like a triple threat, basically. Interest rates being the major threat of the bond. And obviously the other side of it is your counterparty risk. And then I've got people that are involved, some bond traders all over the world. Your currency risk is also a risk to exposure. And then you've got qualified plans, you've got IRAs and so forth. All of those are extremely, at this particular point, in my worldview, risky. And there's a lot of risk involved with that. So what do? I try to copy, when I played sports, I try to copy of the best players, looking at what they're doing in the world of investing, in the world of business and money. I try to copy and see what are the wealthiest investors doing? What are the professionals doing? And they're all in cash, and a lot of them are warehousing their capital in mutual life insurance companies and insurance contracts, where it's a private contract between you and that mutual insurance company that's been around for 150 years plus. They've been profitable every single year during their existence. You have a guaranteed, your capital is guaranteed. There's guaranteed growth, tax-free, which taxes down the line, if we look at where we're at, what is it, $34 trillion in debt right now, just in the United States. So you're protecting that future tax exposure and liability. And then also you have guaranteed access to this. I got my teeth kicked in 2008 and 2009. I had HELOCs pulled. Again, I didn't know market cycle, so I came in and bought a bunch of real estate in 2009, caught a falling knife, made all the mistakes. So from that, I'm learning that, hey, this time because I could see where we're at. I want my capital. I want to protect it. I want it guaranteed growth, tax-free. I want guaranteed access to it, because when you're going to need capital, there might not be capital to access. So this strategy with infinite banking and warehousing it at the correct place is very, very powerful. And right now, and I could see a lot of extremely wealthy investors doing exactly that. Family offices, we've seen everything in our world positioning themselves in these contracts to be able to capitalize on massive opportunities, because they're coming. And like I said, I'm a very optimistic person. I see a lot of opportunities in the coming years, and you want to be able to access capital when those opportunities reveal themselves.
No, 100%. And we talk often on our channel about real estate investing. And I would say probably 90% of our audience is involved or has some interest in getting involved in real estate. And we've been really successful with a platform that you're familiar with. I've talked about it on your podcast with the preferred lending. And by design, it's in the luxury space. That market is still booming. It's not affected the same way, kind of lower price points are, particularly in the flip space. So that's been an absolute boom. And people that have taken advantage of the infinite banking and have whole life insurance policies through you, are utilizing that as an instrument to get involved in these. People that have, hoarded cash, or they've, picked up, debt weapons like HELOCs, and they've got direct access to those right now, are killing it. They're getting involved in these projects anywhere from $50,000 to a couple $100,000 because they did the right things and they had access to that now, so that they could capitalize on these deals. And they're seeing returns anywhere between 20 and 35-40% in some cases within a 6-month period of time, cash on cash. You would double that, to do an annual cash on cash return, and it's collateralized by the real estate. So, you're short up there. They're in the single purpose LLC. So from an entity structuring standpoint, which I know you always preach, that is buttoned up as well. So there's opportunities out there right now if you're poised and you're positioned for it. The preferred method that we're doing with Maven is one, obviously, analogy or one example of that, and you're sharing some yourself, but it's all about doing the right thing so that when those opportunities do come along, you're in a position that you can capitalize on them. So we're in that phase right now. What do you think is coming next? Does it ever break the cycle and kind of skip one of those stages? What are you thinking is going to happen next? And what do you think the pros are going to do? Yeah,
and that's a great question, because as you mentioned, we have another presidential election year next year. So it's very, very interesting, because you look at this and people say, well, when do we see this banking crisis like really gaining steam? Because, for all of the listeners and viewers, banks are in trouble because of the interest rate spike, because most banks had their money in bonds. That's where they would just keep it in bonds, right? Well, what happens if interest rates spike up is the value of bonds go down. And when interest rates double and more than double, you're sitting on a significant loss in your bond positions. Now, a lot of those banks usually have like bonds that they hold to maturity and other bonds which it would sell if they need to produce capital to their depositors. Well, what happens if there's a bank run? Then you've got to sell all of those, and that's what happened to Silicon Valley Bank, right? So back to what do I see coming? You've got a presidential election year, which is usually you juice the markets, you lower interest rates, you keep it there, because you don't want people going to the voting booth that's, down significantly in their assets, the value of their assets, all depressed and demoralized, right? So with every cycle, you want to juice it. So this is going to be interesting. Could the next shoe drop next year? That could be. But if you look at the past, like usually presidential election years, they juice it. There's lowering of interest rates and so forth. But what I can say about also next year, if you look into 2024, what we are talking about too, and what I would recommend your viewers definitely look into, is just become as mentally tough and strong as possible. Prepare for all kinds of crazy scenarios. Because, I'm a political atheist. I don't believe in any of those things. I just see the world for what it is, and I could see a very polarizing country in the US. It's globally, by the way, every single country. You have very polarizing populations. So that will lead to like fireworks, especially when it comes to elections. So as an investor, you have to operate in all of this. So what we're looking at is saying, hey, it's going to be wild. It's going to be crazy. There's going to be a lot of emotions in the marketplace. Here's what you do as an investor. You keep a cool head. You you focus what you want to grow, which is grow as an investor and your portfolio. And you keep your eye on the prize, like look at what's happening in the marketplace and capitalize into opportunities. Don't get emotionally sucked into any direction. That'll just take away from what you're trying to do and trying to accomplish. So that's what we're looking at. I'm looking at kind of a chaotic marketplace that you're going to operate in. So I'm mentally preparing for it to be as mentally as tough as possible. I'm keeping a cool head. I'm every single day writing down the stuff that's important to me that I need to focus on, and that's where my focus is going to stay. Focusing on all of this kind of stuff, because I think in times of kind of chaos, and times of like, a little bit of a lot of wild cards happening, massive opportunities for folks that could stay calm, keep a cool head, be non-emotional, and focus what they want to grow. And I know viewers want to protect and build wealth for themselves and their families, and that's what we're focusing on.
Great answer there. And I've said this on videos with you before when I was like, it's no time to get cute. Look, guys, there's a lot of money to be made and lost in the market right now. There is the opportunity to create generational wealth while everyone else, the majority, is doing the exact opposite because they're terrified. That's when there's blood in the streets and there's opportunities to make money. If you know what you're doing, and the reason MC's got the ability to stay cool, calm, and collected, and why professional investors have that ability is because most of them have lost it all at one point, right? You've learned lessons the hardest way. Through the school of hard knocks, and once you've gotten your teeth kicked in a couple times, you adjust and you get hardened, you get strengthened as an investor. So, my word of advice to folks that are just starting on that journey: hook up with someone that has been through the market cycles a handful enough times. Don't necessarily just try and go it alone. Experts like MC, this is what they do. Literally, is kind of direct traffic for folks that maybe don't necessarily know what they want to invest in or how to invest, but they've got capital to deploy, and they need folks to help them lead them down the right path. So if you are interested in hearing about the right direction, and again, vehicles and instruments that allow you to do that, go ahead and email MC and his team at ninja@vipfinancialeducation.com. Put Ninja in the subject line, and be sure to include your first, your last name, and the best contact number to reach you in the body of the email. Someone from MC or his team will get back in touch with you ASAP, and at least have a consultation call. It doesn't cost a nickel, and you can at least get some guidance. The ability to just gain knowledge and be a sponge in times like this, particularly if you're just getting going, is paramount to future successes. MC, love having you here on the channel. Appreciate you taking time out of your busy schedule. Would love to bring you on back here after the first of the year. Y'all, drop a thumbs up, a like if you want us to continue to bring MC back here on the channel. He's just an absolute wealth of knowledge. And if you're not a subscriber, go ahead and subscribe. Ding that bell for notifications as we continue to put these videos out. We enjoy doing it. Hopefully you guys are getting a lot of good little nuggets out of this. So that being said, everyone take care until we see you on the next video. Make it a great day. Talk soon. Thank you.